Hi friends, welcome to our channel Be a Wise Investor. Please note, I am not a SEBI registered investment advisor. Contents of this video are for information purpose only. All investments are subject to market risk. If you are not understanding the risk or not ready to face the risk, please avoid stock market investment. We are very much thankful to you all who have shared, supported and subscribed our channel Be a Wise Investor. Please like, share and subscribe this channel. Good morning friends. Today I just want to tell about something which most of us well aware. Though we are all well aware of all these aspects, even some experts may not deeply look into it. I am just going through the details. Please view this and discuss if anything can be highlighted, which will be definitely very much helpful to and helpful as well as benefit to all. Let us start now. Senior Citizens Scheme best investment options available, which we can discuss on. Senior citizens are those who have worked hard for long years and retired to live healthily and peacefully in the remaining period of their life. They must invest their hard-earned savings to protect the inflation and to help them to meet their urgent needs, apart from helping their wards and grandchildren and to be happy with them. In my opinion, the following 5 options are the safest options with good returns in the present scenario. Each one of it is having its own merits better than the other one. One must clearly look into them and analyze them well so that they can save tax benefits and also get good returns. Apart from them, they must seriously look into the matter that the money is safe and is highly liquid. We can see the options in the following slides, and please comment your opinion if you have other opinions also, which will be helpful to me and other friends also. The first one is Senior Citizen Savings Scheme. SCSS is a central government backed savings scheme. It is zero risky investment. It is only for those who aged 60 years and above, and it is not applicable for HUFs as well as non-resident Indians. In case of age, the only exception is those who opt for VRS or superannuation while they are at the age of 55 to 60 years of age, or retired defense personnel between 50 and 60 years of age. The rate of interest at present for the account, which will be opened between October to December 2022, the interest rate will be 7.60%. Normally, every quarter, government will announce the change. The changing interest will not have any effect on the existing deposit till maturity. The interest will be paid quarterly, wise April, July, October and December. There is no reinvestment option available. The minimum amount of investment is Rs 1,000 and the maximum Rs 15 lakhs jointly. The tenure is 5 years and can be extended for another 3 years. In case of withdrawal, SCSS cannot be closed prematurely within 1 year. After 1 year, if it is closed before 2 years, a penalty of 1.5% will be charged on the principal amount, and if closed after 2 years, the penalty will be 1%. But the extended accounts beyond 5 years, there is no penalty after 1 year. The account is transferable anywhere in India. Tax implications. Interest earned under SCSS are taxable as per the tax slab of every individual. If the interest income received under SCSS is above Rs 50,000 in a financial year, then TDS will be deducted at source from interest. The guarantee of regular income and capital protection made the scheme SCSS a popular option since its inception. Second scheme is Pradhan Mantri Vaya Vandan Yojana. In 2017, PMVVY was introduced for all senior citizens. It is a retirement cum pension scheme operated and managed by Life Insurance Corporation of India. It was initially offered for the period up to March 2020 and now extended up to March 2023. The scheme is exclusively for senior citizens with age of 60 years and above. NRIs cannot avail this facility. The interest rate for the scheme is at present 7.40% per annum. Minimum investment under the scheme is rupees 1.50 lakhs and maximum is rupees 15 lakhs. The policy term is 10 years and the pension payout option available on monthly or quarterly or half-yearly or yearly basis. Premature closure option available in case of critical or terminal illness for yourself or your spouse, in which case the surrender value will be 98% of the initial purchase price. There is no TDS on interest, but it is taxable as per your slab. There is no GST on purchase price like other LIC schemes. The third scheme is Post Office Monthly Income Scheme. It is not as attractive as SESS and the PMVBY. It is still a good interest yield option with more security. Here, anyone above 10 years can open the account. Minimum investment is rupees 1500 and the maximum is 4.5 lakhs. And in case of joint names, maximum is rupees 9 lakhs. Post Office Monthly Income Scheme can be easily transferred to any cities in India. For minors, maximum investment is limited to rupees 3 lakhs only. The rate of interest at present is 6.60% per annum, payable monthly, even transferable to one's SB account via ECS. Minimum period of investment is 5 years and can be extended for another 5 years. No TDS will be deducted, but interest is taxable under slab rate. In case of premature withdrawal, no withdrawal is allowed up to 1 year. Beyond 1 year, up to 3 years, a penalty of 2% will be charged, and withdrawal between 3 to 5 years, the penalty of 1% will be charged. Fourth one is Senior Citizens Fixed Deposit Scheme. All the residents above 60 years are eligible to open this account. Additionally, NRIs can also open these FD accounts through NRE and NRO accounts. The rate of interest is not a fixed one. Each bank is having their own interest rate. Normally, the interest rate will be higher than the normal fixed deposit schemes with an additional interest rate of 0.25% to 1%. Accounts can be opened with a minimum of rupees 5,000 and maximum is normally rupees 2 crores. It can be closed prematurely at any time subject to a penalty of 1%. Premature closure is not allowed in the tax saver deposit scheme. Tenure of the deposit scheme normally range from 180 days to 5 years. TDS will be deducted, but the interest is taxable under slab rates. One can also use the senior citizen deposit to avail loan using it as a collateral. It is one of the highly liquid scheme as it is easy for premature closure, or demand loan can be availed using the deposit as collateral. And the fifth one is mutual funds. Mutual funds, everybody knows that it is normally termed as a highly risky one. But in case of debt mutual funds, it is totally, we can say as a risk free, though it is not totally risk free. Post retirement, one's risk appetite decreases and the safety of the capital becomes the most important aspect. Considering this, the option is the debt mutual fund or hybrid mutual funds are ideal, which are having very low or nil amount in equity exposure. Mutual fund returns are market linked and never a fixed one. Normally, debt mutual funds are giving better return than bank FDs as they are investing the funds in the high rated company bonds and government securities. To have little better returns, the conservative hybrid funds can be considered, which are having 10 to 25% equity exposure and 75 to 90% debt exposure. On looking into the last 10-year average, debt funds are giving 7.81% return, whereas the conservative hybrid funds are giving an yield of 8.34% per annum. Here, tax implications are entirely different. Tax is applicable on withdrawal only. Also, on withdrawal, if withdrawn within 36 months, then the gain alone will be added to your regular income and taxed accordingly. But if it is withdrawn after 36 months, then long-term capital gain only will be applicable, that is at the rate of 20%, that too after indexation only. This is the most attractive one to me while comparing all the other avenues. Research indicates that life expectancy in India for Indians to be an average of 70.8 years as of now, and it may prolong well beyond 100 years in the days to come. This gives rise to the need to plan well ahead, assess all your life goals, and anticipate the expenses that come with it. The hard working years need to give way to years of relaxation and rejuvenation. Retirement investments made into the best senior citizen schemes ensures that cheerfully retire from work but not from living your life to the fullest. Kindly analyze thoroughly all the aspects. Additionally, if possible, discuss with your financial advisor and then come to a conclusion. In case of mutual fund investments, you can opt through a mutual fund distributor and not mutual fund analyst. Mutual fund distributor cannot charge you any fees. He can do the work on behalf of you, whereas mutual fund analyst can charge fees from you for identifying the scheme suitable to you. Please think twice and more to come to a final conclusion. With thanks and regards. These all are the information available with me now for sharing. Thank you so much for watching this video. If you find this useful, please like the video, share it with your friends and relatives, and subscribe the video please.